Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is October 17th, 2018, and this is part two of the day trade that I did yesterday. Just a quick review. Well, first of all, this is all for educational purposes only, or maybe even entertainment for some of you. But let's just get right into it. This trading is risky. You can and you will lose money. This particular trade is definitely not for everyone. I'm trading options. You know, now it's a little sad that I want to say, but I can't. I won't say it here. But let me just jump right over to show you exactly the trade first of all. Then we'll take a quick look at the chart, and we're gonna end this. Apply the trade. The trade yesterday. Nine. It's still showing a different. No, that's an older trade. The trade was 9:30. It was an opening trade. It wasn't my 5-minute trade. It was based on what I was seeing in the market, and I'm gonna show you what I was seeing in the market right quick. 9:30 opening trade. Yeah. It was options, yeah, and that was the contract thing there. I didn't trade that. This is the virtual account. This is what you're looking at. It was a 175.50 strike. We got it in for $1.16. We got out for $1.38. The thing actually moved a whole lot more than that, and it was the time to actually start your swing trading. If you're actually, for me, to start my swing trading, if I'm a swing trade, based on what I was seeing in the market. Now let's jump over to the chart. Let me go down to first of all, go down to an hour chart. And this is QQQ, but let me go to the future chart. That's what I look at all the time. That's what I use as kind of like my indicator. It's just me. Funny thing that I do based on the way I've been looking at the market. The market had came down here into this area here a few days ago. This is an hourly chart. The market that came down here into this area a few days ago, bounce, bounce, bounce. This is a strong area where I expect support or demand, ever how you look at it. And I was expecting the market to move back up. I know I looked at it on Friday. You saw something in there for Friday. I was thinking about buying some more shares and just playing around with that, But then yesterday, the day is, yesterday we finally saw, some things that kind of got us excited about just taking a quick day trade. Let me go into here. I'm not looking at my chart that I normally look at. Let me see if I got it set up somewhere else. Nope, not on none of these. Sorry. Let me switch charts then. Let me bring up a different chart right quick. Over here. Turn that off, turn that off. Bring this over. Easier to do it that way. Okay, and let's go down to a 5-minute hourly. Again, okay, yesterday morning on the big picture, on the hourly picture, you can see that it was above what I call my H2 line. I was expecting to at least go up to here, or maybe even bubble back up to these areas here. So that's why I was taking that trade, based on what I was seeing, where it was located at the time in the morning. And it had already been going up, but like it didn't want to go down. It was going to continue back up. Go down to my 5-minute time frame. Zoom in just in what I was seeing then. We can go back. Doesn't really matter. This is what I was seeing. The market was going sideways, heading up, above opening, going to open above what I call my H2 line. So I'm ready I want to take this trade for a quick scalp, 10 cents, 20 cents, 30 cents. That's what I saw, and based on that, it did go up like that. And we was out of this trade at that time. Boom. It was in. It did come back down here and kind of give us a little thing, but this happens. You always get these kind of reversals here. And as long as it doesn't break your lows, as long as it doesn't go against you that much, you hold on to that trade. It didn't get to a point to actually make you want to exit that trade. It didn't close below. It didn't go below, those points. So that's the thing that you're looking at. So then that trade was over at that point on that day. So that was the trade. So now just go back right quick. Options, again, we bought at 9:30. We was out. I put my exit. That's the time that I actually placed the trade. I didn't get out of that trade until about 10 o'clock. So again, that's the way I do it. Once I see the trade that I want to do, I put my order in. I put my exit in like right away. And as you can see, you don't see a stop here. That's just the way I trade. And I walked away. That's the way I have to do it, because again, the market moves crazy. It can get you scared. and all, but you just don't risk any more money than what you can afford to lose. That's the other little thing that you have to get used to. Don't put too much money out there in this market. So that was it. I'm going to just take a quick look at the option change, and I will end this video. QQQ, but let's look at QQQ. We don't want to look at NQ options. And let's go back to this weekly. Not the weekly, it's actually the monthly. It was this strike right here. And as you can see, it was this strike right here. And as you can see, that strike right now from $1.16 to $3.79, you know, that you can actually be getting out of that trade. So that's, like I say, this is also the time to start swinging. But I don't swing these monthly options. I actually go further out to where I actually do my swing trades at. So this is Solomon from Right Side Trading. Guys, have a great day trading. Talk to you tomorrow, maybe. Have a good one. Bye.